What's going on, everybody? Welcome back to my YouTube channel. Now, today I'm going to share the simplest trading strategy for beginners, intermediate, and advanced traders, if that even exists. Now, this is no fluff. You don't need 10 indicators. You just need one candle, two time frames, and two patterns. And if you've been overwhelmed, if you find yourself strategy hopping, if you find yourself guessing and confused as hell, then this video is for you. This is the exact method that I use. It's simple, it's structured, and it works. So I'm going to break this down to you today, step by step, and I promise you, you're not going to look at the charts the same. Let's jump on the charts. Now, what do we need? Well, we need two time frames. We need a high time frame for directional bias, and we need a lower time frame for precise entries. So as an example, you can use the 1 hour with the 1 minute, which is what I use, or you can use the 4 hour with the 5 minute, or the 1 hour with the 5 minute, whatever fits your schedule. Now, you're going to use the high time frame to answer one simple question. Are we bullish or are we bearish? That's it. No guesswork, no forecasting, just following structure. So let's jump onto GU. Now, I'm going to share an example with you here. This is not cherry picked. This is the exact same setup that my students were able to take. And as you can see on the screen here, pop, 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 pop. These are the trades they're able to take. Now, why is this so simple? Well, on a day-to-day basis, guys, we set times to trade. So for me personally, I look to trade from 6 a.m., which is pre-London, to 9 a.m., which is an hour after London Open. And then I look to come back to the charts at 12 p.m. pre-New York, all the way till 3 p.m. Okay, this is 2 hours before London close. Now, what I'm looking for here is a simple bias. Now, we're going to look at GU here. And as you can see, as we come to the charts and we're ready to trade, we have a shift in structure here. Now, it's pretty obvious, and we can identify that simply by seeing that the market was pushing bullish, and all of a sudden, magically out of thin air, the market reverses. Why? I don't know, and I really don't care. What I do know is that I'm here to show up and identify the behavior of the market in this immediate moment. And because I'm trading one candle from a high time frame bias, I can see that candle has closed bearish. I can also see from a structural perspective that the market was pushing bullish. We're respecting this trend line, and for the first time after a very long period of time, we finally broken through that. Now, once I have that evidence, what I want to do is I want to scale down to my entry time frame. Now, the reason I'm scaling down here is because I'm looking for precise entries. I'm looking for the lower time frame to indicate to me a directional bias. Now, I want to be clear on this, okay? One candle is all you need to enter. So you're not going to be trading zones. You're not going to be trading areas. You're trading reaction and behavior of a single candle, okay, in its context. So in this instance, we're looking at a bearish candle. So what we've got to do here is we've got to anticipate. Now, when I say anticipate, just to be very clear here, we don't need to be a psychic. You don't need to be overly prepared. Anticipate, and also is not guessing, is simply waiting for the market to give you a clear setup. So with confluence, what we're looking for is structure, time of day, price behavior, your patterns, and then enter with confidence to follow the plan. Okay? So here we're looking at GU. Now I'm just going to highlight to you where the candle has opened. So this is the 7 o'clock candle. This is where the candle is opened, and this is where the candle has closed. Now, as I know already from a higher time frame perspective, the previous candle has closed bearish. So naturally, I'm just going to look for price to continue in that direction. And what I'm looking for here is for the price to give me a depiction in anticipation that the market is going to continue trending bearish. So in theory, what I'm looking for, so that you understand, is I'm looking for the market to continue from this consolidation, show to me that we're now shifting from this consolidation and we're now truly creating that lower high formation in anticipation of the market to continue bearish once it has broken this low to make a new lower low. That's all I'm looking for here. So as you can see here, we have this consolidation. We know the previous candle has closed bearish. We have a structural high and we have a structural lower high. This is what we call a deviation. As you can see here, we have a strong bearish close. Now, ideally, what we're looking for in the live market is to look for the break of this low. Because we're using the replay mode, it's a little bit more difficult to do that, but it will still work. Once I see evidence of price creating that lower time frame structure in anticipation of this market to continue trending bearish in line with the previous candle closing bearish and in anticipation of this current hourly candle to continue bearish, this is an A plus setup. So what I want to be doing is I want to be placing my stop loss above the high where the low high is formed. And I want to be targeting a 1 to 2 risk reward ratio. Now, it is entirely up to you what you target. You can go for more, you can go for less, but I would suggest everybody who's starting out using the strategy to start with a smaller risk to reward. Because what you want to do is you want to get the wins in the bag. That builds the confidence. And then once you build the confidence that the entries that you're taking is giving you high probability setups, then later on down the line, once you've collected enough data, you can then expand that to bigger risk to reward once you have the data to back it up. So as you can see here, we're going to sell this. We're going to place our stop loss above the high. Here we're risking 500 and we are going for a 1 to 2, so 1,000 target. Now I'm going to continue to play this forward. As you can see here, as I said, what we're anticipating is price to continue bearish. And as you can see, this is what we're doing. Now you probably notice here in this formation, we are creating another lower high. So as I said, now what we've done is we've broken the low, we've created another lower high. And again, what we're anticipating is price to continue bearish. Pretty simple. The hourly candle is currently bearish, so we only expect it to continue to drive bearish. What does that mean? Well, if you want to, in theory, you can enter here. Now, I'm not advocating to take multiple entries, but what I'm saying is if you don't get into the first entry, then here is another possible opportunity that you can get into. And again, what we're looking to target is a 1 to 2. Now, I want to make this very clear. What we're doing here is we are simply, oh, it won't let me enter another position, but that's fine. What we're simply doing in here is we are trading this 1 hourly candle using lower time frame structure. We're manipulating that 1 hour candle's range and we're taking advantage of it. Okay, so let's continue with this. As you can see here, price continues down and I believe we hit our first TP. Okay, so as you can see down here, this is a 1,810 profit. Should have been 1,000. I was trying to enter two positions at once, but never mind. Here we go. So that's that TP there. Here is a second one if this is what you want to enter. And because we are only now 12 minutes into the candle open, we can continue looking for opportunities. And now what we're looking for here is we're looking for price to create that structure, that lower high structure again, to continue to resemble this downtrend, as you can see over here, what we've drawn in. Now, here you can see a lower high forming. Remember, if we're going to enter this one, we need a break of this low. Okay, so let's see what happens. We don't break that low. Now you can see here structure has violated that sentiment. So that lower high has been violated. We've now created a high. What we now need to see price do again to create that structure, which we call a deviation, is we need to see price now switch back to being bearish, creating that lower high again in anticipation of price to continue bearish. Okay, that's it. So let's continue to see what develops here with this sentiment. This is not a lower high, remember, guys. This is just the start of the sentiment of the market shifting in our favor. Here we now creating a structural high. We now need to see price create a structural lower high in this formation. Here is a wick that forms, and here is a lower high that forms. So again, we continue the sentiment as we've drawn in over here. This is our deviation. Here is our sentiment shift. We go from being bearish to lower high, to failing to break, to making a new high, which is now bullish. We make a new lower low. Here we make a new high. This is our lower high, new high. This is our structural low, lower high in anticipation for price to continue bearish. And again, we have another entry here. So again, just to point out, guys, we are still trading the same 1 hour candle. It is only 35 minutes into this candle being open. We're going to target a 1 to 2 risk to reward ratio. And again, let's send this to the back. Let's sell this as we would. Let's pop our stop loss above the high here. And then let's put our TP at a 1 to 2. There you go. That will do. And then let's see what happens. And there we have it. Okay. So we started trading our session at 8 o'clock. As you can see here, we finish our trading at 8:42. We have nice profit, $2,600 here, and all we've done is traded one candle. Now, I want to be very clear here. You have to understand that you're not going to win every trade, and that's just a simple truth. But if your risk to reward ratio is solid, guys, a 1 to 2, a 1 to 3, then you can be profitable even with a 40 to 50% win rate. Okay. One good trade with a 1 to 2 risk reward ratio pays for two losses. So you've got to let your risk reward ratio do the heavy lifting and not your emotions. So what I want to point out here is this. This is our first entry. This is our second entry. And this is our third entry using a simple model, which is the two candle theory incorporated with deviations and the anticipation of the market continuing in a simple trend. If we go back to the hourly time frame, you can clearly see this highlighted here. Our first entry was when the candle was bearish. Our second entry was when the candle was bearish. And our third entry was when the candle was bearish. And as I've already shared with you, this is not me cherry picking. These are trades that were actually taken by traders in NDS. Okay. So guys, you've got to stop system hopping. You've got to focus on one candle. You've got to focus on two time frames and one or two patterns. And master one thing. Once you do this consistently, guys, I can promise you everything will fall into place. So if you've enjoyed this video, do me a big favor. Hit that like button for me so that I know you enjoyed this video. I'll continue to make more. Subscribe if you've not already subscribed. Turn on notifications. And until next time, as I always say, continue to trust the process.